Welcome out to the Blue Sky Trading Lab, ladies and gentlemen. This is Coach Matt. We're going to be talking about a very important topic in the lab today. The lab's going to take about 30 minutes here today. And what I want to talk about specifically, and I think it's very applicable to the current market condition, is reversal analysis. And specifically in reversal analysis, guys, it's the end of a trend and it's the birth of a new trend. And I've always found that if you can identify the beginning point of a trend, that is the best position to be in from a trader's perspective. When you're talking about getting into a day trade, a swing trade, a position trade, an investment, whatever the case might be, I find that's always a little bit easier and best when you're coming from a point of a reversal from a technical condition. And so what I want to talk about, and I think you can apply it to every form of trading you do, is the key points that we see play out in reversal analysis in general. Now, is everybody familiar with what a reversal is, just in general, like the concept of a technical reversal in the market? How well do you guys understand technical reversals? Like, if I were to say, what are the five stages of reversal? How many of those stages could you tell me? If I were to say, what are the three types of reversal patterns? How many of those specific three could you tell me? What do you guys, just to help me out, just understand kind of from a pattern perspective? Alky zero, link none. So really new to it, would you say? Very new to technical patterns? Is that what I'm hearing? Okay. Guys, the number one rule in trading is to don't lose money. That's the number one rule in trading. The number two rule is to trade with the trend. Okay, so type those down, write those in your notes. Rule number one, don't lose money. Rule number two, trade with the trend so you don't lose money. Now, within a trend is designed through a series of patterns. There are three patterns within a trend. There are three reversal patterns. The number three is a very important number for the market, by the way. But in a reversal is a technical pattern that ends the previous trend and is the beginning point of a new trend. Now, you have lots of different types of reversals, but a reversal is nothing but a technical pattern that reverses the previous trend. That's all it is. So technical reversals refer to a change in direction. They're not just a pivot, because a pivot is a change in direction, right? When you see a technical pivot, when you come in from an overextended perspective, let me get that a little bit bigger there. Give me 1 second. So when you come to a pivot point, that's a change in direction. Support pivots, change in direction. Resistance pivot, change in direction. Support pivot, change in direction. A reversal is multiple pivots changing the trend. And it's a story that is told over time, quite frankly. And so when you're talking about reversals, what a reversal is prices going up. We see the technical conversation change. Price starts coming down. On the flip side, on the downside, bullish reversals signal a potential opportunity to get into a new trend after a sell-off, after a bearish downtrend. And so reversals are very, very important in the sense that they happen all the time. And they're the beginning point of a trend. And if the number two rule in trading is trade with the trend, and I can identify the beginning point of a trend, that's where I can maximize my reward and minimize my risk. See, what a lot of people will do is they'll find something that's already in motion. They'll find something that is already in a trend, and they'll just trade those patterns within the trend. Whereas if you're waiting on the birth of a trend, you can get in at the beginning point. And if you can get in at the beginning point of a trend, you're maximizing your probability, you're maximizing your return, and you're minimizing your risk as a trader. And so one of the things that is very important in the market is to understand reversal analysis, because I can't tell you how many times I've seen people say that's a reversal when it really is a continuation pattern. And so what we have to understand is the difference between reversal patterns and that of their twin sister, the continuation patterns. So the common patterns within reversal, there are 5 distinct technical techniques that we look at when we're trying to track the difference between an M formation and a cup and handle, for example, a M formation and an ascending triangle, for example. You might like on the technical patterns, there's similarities to them, but at the end of the day, they're vastly different in what you as the trader would expect. And so I want to talk about all of these 3 here. Number 1, and I've talked about this in sessions of the past, the concept of momentum and an understanding trend momentum, pattern momentum, candlestick momentum. Understanding momentum in the market is a vitally important concept. What slowing momentum is the trend is slowing down over time. I'll talk about it here in just a second. When you start to identify slowing momentum in the trend, your spidey senses start ratcheting up a little bit. You start thinking about the market a little bit different. You start thinking about the stock you're looking at a little bit different. Slowing momentum is a precursor to the end of the trend. We are not at that stage, however, in a slowing momentum environment. It's just a cautionary flag more than anything else. Slowing momentum is a yellow light. It's not the red light. It's not the green light. It's the yellow light. It's caution. It shows you caution is happening in the market, and our spidey senses step up. The second thing that we see in a reversal situation is pivots start to hold. And why that's important is because in a trend, you constantly have the increase of resistance. You constantly have the increase in support. And that's what support and resistance is. They're nothing but pivots. And so when those pivots start to change and we're not seeing higher levels of resistance and higher levels of support, pivots start to hold. That creates more of a neutral condition. Step 3, pivots are tested, meaning if resistance holds, the pivots come back down into support to create a neutral condition. Step 4 is where you trade it. See, what happens a lot of times is people will not show the patience necessary to let patterns come to their proper conclusion. And let me just ask you guys a question. How many of you have had an issue with the patience needed to allow patterns and trends to actually develop? How many of you would say that patience is something that you need to work on a little bit as a trader? I know what you're thinking there, RQ. We all can, guys. Every one of us can, right? As a pattern trader, I have specific rules. Okay. So we were sitting in the power hour today. And throughout the power hour today, there was a lot of conversations on it's going to go up, it's going to go down, it's going to go up. This is what I expect. This is what you expect, all that jazz. And I don't know if you guys remember, but I kept coming back and I think I said it 5 different times. I need a close above 420. Nothing else matters. I need a close above 420. How many of you heard me say that earlier today in the power hour? I need a close above 420. The reason I said that, okay, and that's they're kind of the same thing, RQ. Like if we don't get a close above 420, the path of least resistance is down, right? And so we're kind of saying a little bit of the same thing. I'm saying I need this for a bullish situation because if you don't get this, the path of least resistance is down. Exactly. We're basically saying the exact same thing. I'm just speaking it from a bullish perspective, and you're thinking about it from a bearish perspective. But we're talking the exact same technical language there, and so the reason I said that, guys, is because I had some doubt towards if we're seeing a reversal or a continuation pattern. And I'll explain that as we go through the session today, because I think it's extremely important. Because if I didn't feel we were having a debate between reversal versus continuation, I would have had a different thought process regarding how to trade the environment. There was, I wouldn't say there was like a fantastic bullish reversal today. There was a head and shoulders on the shorter time frames. And so like if you go to the 5 minute chart earlier today, you have this head and shoulders playing out, right? And yeah, I'll take a look at Tesla on the 1 minute chart. What Tesla had a reversal play out today. It was really, really good. This would be a head and shoulders formation right here. So do you see this kind of equal support level and then it punches down, comes right back up? That right there. So right here would be the left shoulder. That's the head. That's the right shoulder, kind of in that pivot. And then when it breaks back up against this pivot before the reversal, you see how that pivot right there, let me highlight this a little bit closer. So you see this pivot before the reversal, okay? So here's your support level. Here's your pivot point in front of that support level. It breaks it, doesn't last underneath that, comes right back up. And then do you see this reset right here? Do you see how it starts coming down but can't break the level that the left shoulder established? That's a hallmark sign that you're seeing a pivot point here. It's holding that. The retracement was deeper, so the snapback got held up against the pivot point. That is a really positive sign. However, what I will say is this. A lot of people at this stage, they will front run it and they're wrong, because the reversal isn't actually confirmed simply because you had an increase in pivot. That confirms the pattern you're seeing. But in a head and shoulders, the actual trigger is when it breaks out of the pivot point, meaning once it gets above that level right here's a good trigger, right here's a good trigger. And so, yes, you are seeing that play out. There's no doubt about that. Well, that's the ES, correct? On the 15-minute chart, RQ. The NQ. So that's the NQ on the 15-minute chart. That is one I'm going to break down here in just a second, because that's kind of the debate right now is are we seeing a reversal play out, or are we seeing a continuation situation in the greater construct of the ES and the NQ right now? And so we're definitely going to be looking at it. Yeah, well, a lot of the gap down situation was from the earnings report, and then we saw the cash out open a little bit different. Let's save that, because I only got about 15, 20 more minutes before I do have to run. I have an emergency I didn't know about that now I have to run and get. But we will take a look at that here in a second. So, common patterns, okay? All of these patterns are specific patterns within a reversal. The same way, guys, when you're talking about a trend is nothing but a series of patterns. That's all it is. Higher, high, higher, low. So you have a higher pivot point of resistance. You have a higher pivot point of support. You have two basic patterns within a trend. You have three specific patterns within a trend. You have the breakout, overextension, and the pullback, or i.e. the retracement. Within a reversal, you have five of those things. You have slowing momentum, which is the precursor. The pivots hold, which is the end of the trend. Pivots are tested, which confirms either you're seeing a reversal or a continuation pattern. And then the tradable signal is not within the development of the pattern, but the tradable signal is when it breaks the pattern. And that's the number one mistake I see traders make when they're trying to digest whether we're seeing a reversal or a continuation, is they don't let the pattern come to a proper conclusion. They will try to get an edge within the pattern, but the edge does not exist until the pattern is broken. And that's why I kept saying in the power hour today, I need a close above that level. I need a close above that level because it's the close that is the violation of the pattern and confirms whether or not we're seeing a reversal or a continuation pattern. And so that's kind of, I just wanted to give a little bit of context for that. We'll take a look at that chart here in just 1 second. The kiss is not necessarily a pattern within the reversal. It's the first pattern that develops after the reversal, and a really good opportunity to get into a trade if you miss the breaking of the pattern itself. And so the kiss is just that next pattern that develops after a reversal plays out. So step one, we look at momentum. Momentum is an end-all be-all situation in the market. And when we're dealing with momentum, we're talking about trend momentum, not pattern development momentum, not candlestick momentum. We're talking about trend momentum. And when you're assessing trend momentum, there are two techniques to be able to identify trend momentum. The first one is to look at how far something will run when it breaks out of a resistance level. And so in this first situation, the market breaks out of resistance, runs $2 before it consolidates. The next level breaks out right here, runs $4 before it consolidates. That's increasing trend momentum. When you have increasing trend momentum, there's no reversal conversation. Zero, none. None, 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 none. You are looking at it as a buyer. You're looking at it as a bull. You are not being that degenerate counter trend trader. You are simply waiting on a better pattern to trade in the construct of that bullish situation. Trend momentum is a very powerful concept for continuation analysis. Whereas on the flip side, when you see slowing momentum using that same technique, market breaks out of resistance, runs 4 points. Next breakout runs 2 points. Next breakout runs hardly nothing, and we get a little bit of a fake out situation. That is slowing momentum. And when you see slowing momentum in a trend, whether that's an intraday chart on the 5, 15, 30-minute chart, or whether that's more of a swing trading time frame like the hour, 4-hour, or daily time frame, doesn't matter to me. Momentum is momentum. And so when you see a slowing momentum condition, that is the first identification that we've seen technically before we're like, okay, trend's over. Trend's over. I'm not pushing it here. If the trend's going to slow momentum, it's because buyers are seeing it differently. The market is seeing it differently because as the price goes up, 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 obviously the momentum's going to shift a little bit. And so slowing momentum, or otherwise known as decreasing momentum, is an early sign that you are seeing not a reversal yet. Slowing momentum is a sign that the end of the trend is coming, and pattern development is really key. Meaning, are we going to see a continuation pattern here, or are we going to see a reversal pattern? And when you're looking at that, there are 3 types of reversals themselves. Number one is you have the traditional double top, double bottom. That is otherwise known as a W formation for the bullish pattern or an M formation for the bearish pattern. So when pivots are equalized, meaning double top, double bottom, pivots are equal, you have an M or a W formation. An M is at the top end of a chart, a W is at the bottom end of the chart. Now, the second pattern, that is a very traditional pattern, is the head and shoulders formation. And you have a bullish, i.e. The inverted head and shoulders, and you have a bearish called the head and shoulders formation. The inverted is the bearish one. So those are both very traditional reversal formations. Most technicians can close their eyes and see these patterns play out. The V-shaped recovery reversal is not a traditional reversal, although it's a very important one as well. But it's more important after the pandemic. Before the pandemic, reversals, I would say 90% of all reversals took on either a double top, double bottom, or a head and shoulders formation. Today, the V-shaped recoveries happen quite a bit, quite frankly, both on daily charts, on intraday charts. The algorithms are algorithms don't have the same time components that you and I have. And so algorithms can really drive a V-shaped recovery, especially when we get a lot of short covering there. And so we got to talk about all three of those. Now, when you deal with the double top, double bottom, once again, double tops, double bottoms are equal on the pivots. And so as the market is coming down, 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 it pivots as a support, works back up into resistance. And as the market is coming down, 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 it does not break that previous support. Now, that does not mean it's a reversal simply because you have slowing momentum and then a double bottom. To confirm the reversal, you have to work all the way back up into resistance to create the actual W formation. I'll talk about the differences here in a second. Now, on the flip side, the M formation is when the market is going up, 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 hits resistance, comes back down into support, forming that higher level of support, works into resistance. You're expecting it to break out, break out, break out. It doesn't. It comes right back down into support. That is a reversal. Now, when you see these play out in the market, guys, let's take a look at the W formation, for example. The market's coming down, pivots back up, comes down, pivots back up, and comes down. Now, do you see this level here? This wave versus this wave. This wave right here is contracted against this wave. For example, this wave goes from 25 down to 10. It moves 15 points. This one moves from 15 down to 7, moves 8 points. The wave contracts. That puts you on radar for what? What does slowing momentum put you on the radar for? What do you start to look for? Where does your mindset go when you have a slowing momentum situation? What are we starting to expect? Not a reversal yet. Not a reversal. We're expecting the end of the trend. Everybody write that down. We're expecting the end of the trend. When we see slowing momentum, we're thinking the trend is starting to come to a conclusion. We do not know if the next trend is opposite of this trend, though. We don't know that yet. We have to be patient in that development. And that's one of the errors we make as technicians is we assume the one trend is over, which means the next trend is going to be opposite. We don't know that. We have to see that through the development of whatever pattern we get. Is it a reversal? Is it a continuation? Is going to be a conversation. Now, as the market comes it starts to slow down, and the market comes right back up into resistance, and then pivots back. Now, once we hold the pivot right there, is the trend over? Once that pivot holds, is the trend over? Yes, it is. It is. Trend's over. Has to be. Has to be. Remember, what is the pattern within a trend? Lower low, lower high. Well, if you no longer set a lower low, you no longer have a trend. Does that make sense, guys? Like, it's over. You don't know the next pattern, but the previous trend is over, which means you don't have a probability yet. I don't think it would be a change of character yet, Princess. And the reason I say that is because the next trend could be bearish. So we don't know that. That's the point of the 5-step process, is to ensure that we do get the data and we do get the evidence to answer that question. As at this point, all we know is the trend is over. And again, think about this as the market's telling a story over time. Think about it like that, guys, okay? Think about this as a story told over time. In slowing momentum, it puts us on the radar that the trend is starting to come to a conclusion. When the pivots hold, it's telling us that the trend is over. Now, step 3 is very, very important here. Step 3 is when you can determine, are you seeing a reversal versus if you're seeing a continuation analysis? Well, that's the thing, Primo. We don't know yet. You could see a final spike here. And if you do see a final spike here and it comes right back up, that's a head and shoulders formation. That's the thing about the slowing momentum is you're on radar for that. Remember, a W formation and a head and shoulders is the only difference, Primo, is you get that final spike. Does that make sense? Like the difference between a W and a head and shoulders is you get that final spike to the downside, but it doesn't last. It comes down right back up, like we saw in that Tesla situation. Like for example, when we come back out, we were looking at Tesla earlier. You got this situation on Tesla where let's go to the 5-minute chart here. Now let's go to the 1-minute chart because that's where you can see that kind of spike. You see, so here, for example, you see the momentum here coming down, 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 down. Deeper retracement comes down, can't even get underneath it. So we know the trend's over right here. We know that's over right here. But we're looking at the reversal through the lens right here on that 1-minute chart. And you see this final spike down, exactly what you're saying, Primo. You get that final spike down, right? But it comes right back up above this channel, this extremely important channel that we all know. Final spike comes right back. Well, yeah. If it would have held here, that's a W. If it spikes and comes right back up, that's a head and shoulders. And so the difference between a W and a head and shoulders is kind of exactly what you just saw. But let's go back into the development of the continuation pattern. So let's say we're developing a pattern right here. And we've double bottomed and we're starting to come back up. Now, again, this is the moment in time where it will tell us whether it's a reversal pattern or whether it's a continuation pattern. See, the story that we're trying to understand is not just the story between the buyers and the sellers and the strength of the trend and the momentum. The story we're trying to tell is who's controlling price action. You heard Riz say it earlier today. You heard me say it earlier today. We've said all week long, bulls are controlling price action because the relationship of resistance here is very important. If the resistance level is lowered within the backdrop of the reversal, it's not a reversal. It's a continuation pattern. Because if resistance is lowered, the sellers or the bears or supply still has the control. And that puts a tremendous amount of pressure on a potential violation of support. And so when you're looking at the difference between a continuation versus a reversal, that pivot within the neutrality is extremely important. It's one of the most important signals you'll see in a reversal versus a continuation pattern is what happens at this level of resistance. Because if it pivots and you have a lowered level of resistance, well, that tells you that who still has control. Who still has control if resistance comes down? Regardless if support stays horizontal, who still has control? The bears do, absolutely. And if the bears still have control, do I want to be like, oh, but support held and the market's like forming some support? No, resistance still went down. Bears still have control. And so if the bears have control, I'm not going to look at it through the bullish lens. But if the market comes back up into resistance and those pivots are equalized, even on the pullback, I'm going to be looking as a bull. And so this pivot point in the middle of the reversal is extremely important because that's what's going to dictate whether we're going to be looking at this through the bull lens or we're going to be looking at this through the bear lens. And so if it pivots and comes all the way back up into resistance, we're going to be looking at that through the bull lens. If the pivot occurs in the middle and it comes all the way back down into resistance, well, get ready for a potential bearish violation. This is the key distinction. This pivot point right here is the distinction whether or not you're seeing a reversal play out or whether or not you're seeing a continuation play out. Until we see that signal, we do not know. Now, the same thing can be had on the bullish uptrend. When the bullish uptrend's up, 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 and we see that slowing momentum, we therefore expect it to hold. And at this point, we don't know who's going to win the battle of resistance. We don't know who's going to win the battle of is this a reversal or is this a continuation? Now, if the market comes all the way down into resistance, that's an M formation, and thus we're looking at it through the bear lens. But if we see a pivot point that is higher than the previous area of support, that is a cup and handle formation. And so I just wanted to do a little bit of whiteboarding. We'll do more reversal analysis next week as well, guys. For example, we'll take a look at the market next week, and we'll do some back testing next week, and we'll take kind of the volume conversation we had last week, the reversal continuation conversation we had this week, and we'll do some back testing next week. We'll spend the entire lab next week doing nothing but back testing the things we've worked on over the last couple weeks. So next week, we're going to do some live case studies, doing back testing. It's going to be an awesome, awesome time. For now, let's get into the ES and let's look at it from today's price action perspective. Now, I'll tell you right now, guys, if you're struggling, if you are not a master technician, I'm telling you right now, you should not be tracking stuff on a 1 minute chart. If you're not quicker than I am at your technical read, I'm telling you, you should not be looking at a 1 minute chart. You'll get more mishits than you'll get on anything else. I think if you're a day trader and you're doing pattern development on a 1 minute chart, you're not a day trader. I'm sorry, you're not. You are absolutely not a day trader if you were doing pattern development on a 1 minute chart. Not happening, not in any time frame, not on any trader through the history of mankind. No day trader would look at pattern development on a 1 minute chart. What type of trader does pattern development on a 1 minute chart? I just want to be, and I'm just a stickler for being consistent on terminology. What type of trader? That's scalpers. Okay. It's not the gambler, it's the scalper. Scalpers they live on 1-2 minute time frames, right? They love their 1-2 minute. I just want to make sure that when we're looking at a 1 minute time frame, this is not a day trader's time frame. This is a scalper's time frame. And there's nothing wrong with scalping. I'm not trying to be negative towards scalping in any capacity. I have just found that the greatest time I've been teaching this lab, talking to BluSky traders, what I have found is most people consider themselves day traders, but they don't do day trading techniques. Have you guys saw that, by the way? Have you guys seen that, by the way? People say they're day trading, but they're doing scalping techniques. Okay. To a trader who is those categorizations is very important to me. So I'm just a stickler for those types of things. But if we are going to look at a 1 minute time frame, guys, again, this is not a day trader's time frame. This is a scalper's time frame. And even as a scalper's time frame, I would still do trends and pattern development on the 5 minute chart or the 15 minute chart, even if I was executing on the 1 minute chart. So let's look at this through the lens of the 1 minute chart. The 15 minute chart here. Now, earlier today, the market has been bullish through the last couple of days, right? Had a real good day yesterday, fantastic continuation day yesterday, just really good yesterday. On the overnight session, we had a lot of consolidation. And so this consolidation is just in the kind of the greater construct of that nice little 1 hour trend here. Now, you got a 1 hour trend here really from this point here. You see how this pivot point on the 1 hour trend is equal right here? That means this is kind of the trend we're talking about here. Does this trend have momentum as of right now? What do you guys think? Does this trend have trend momentum right now? Yes or no? Well, let's identify it. You had it break this level, 73, and it ran up to 406. Okay, so it ran right around 23, right around 30 points, 33 points. It broke right here, ran a little bit. Okay, so it's still a bullish uptrend, but can we agree that we're seeing some slowing momentum here in the trend? Can we all agree with that? That the trend is slowing down. Okay. And when the trend slows down, does our spidey senses pick up for, okay, is this a reversal versus continuation? Are we ready to have that conversation? Is this a continuation? Is this a reversal in the backdrop of slowing momentum? Yes. And in the backdrop of slowing momentum, should we be a little bit patient in pattern development? The answer is obviously rhetorical questions are yes. So now let's take it into the 15-minute chart here. And let's take a look at this story. Now, and I'm going to come to the NQ on this because this is the one I was tracking earlier today. So let's draw our pivots. Pivot point, pivot point. I discount that wick, pivot point. Now, going into power hour right here, we had increase in support levels against the backdrop of slowing momentum and trend. Okay. So we identified the slowing momentum in the trend, but we still have increasing support levels going into that. If we still have increasing support levels going into that, is this a continuation analysis or is this reversal analysis up until this point? It's all continuation. As long as support's increasing, you're thinking bull. Now, if that level comes right back down and we no longer have an increasing support level, now what is it? It's a reversal. Do you see how tight the analysis is between a continuation versus a reversal? Do you guys see how tight that analysis is? They're so closely aligned. They're so closely aligned. That's why I kept saying earlier today, we need a confirmation close above 420. Do you now understand why I kept saying we need a confirmation close above 420? Does everybody now understand why I kept saying that today? Because we had slowing momentum and trend, and we had a continuation versus reversal conversation, and it was sensitive because you got to see the breakout. And does this help when we do this type of conversations, guys? Can you now see it? Awesome. Awesome. Okay. Now, I truly do hate to cut the lab short. I hate it more than my teeth hurt when I have to cut the lab short. Next week, I'll do you one better. We'll go overtime. Okay. So next week, we're going to do an overtime session and we're just going to do back testing. We're going to take the concepts we've learned in the last couple weeks on volume and pattern development and continuation and reversal, and we're going to do nothing but back testing case studies next week. We're going to do case studies on the ES, on the NQ. We're going to do stock case studies. We're doing commodity case studies. We are going to perfect these concepts, guys. I wanted to put the lay of the land here today, but we are going to work on them more and more and more as we get into next week. That sound fair, guys? That sound good for everybody? Yeah, 8 p.m. Okay. Now, on the downside, by the way, if we break 420 and confirm above 420, would I still like it as a bull, even with this candle breaking the pattern? Yes, I would. Of course I would. It's a clean break, 420. But now it also puts it on the edge for the bear. I was not looking bearish before this candle. But now that we have an M, if we get a confirmation close underneath 376, you have a bearish situation. So now that the pivots are equal, you are equally looking at support versus resistance, and you see them as equalized right now, which means you would be willing to take a trade on the top side versus the downside. I do think you would rather do it on the top side because it's cleaner, but because you now have an M formation on the short-term 15-minute chart, you could entertain a shortable situation underneath that pivot. We're going to do more of that. I just ran out of time here today, Primo, more than anything. Like I said, I had an emergency. I got called like literally 1 minute before the lab started. And so this kind of ruined my last 15, 20 minutes. But I promise, guys, you know me. I'll make it up next week. And we will do the V shape, no doubt. All right. Everybody have a wonderful, wonderful rest of your day. And if you need anything from me, guys, hit me up. Yes, Al. Yeah. But next week, back testing things we've worked on. We'll do the continuation of this conversation again. And I hope everybody has a blessed and wonderful rest of your day, ladies and gentlemen. Thanks for being the best part of BluSky. Later, team.